Good morning, everyone. A very cautionary tale today on input VAT recovery. So just an example of how you've got to get all the paperwork, all the procedures, all the documentation right in order for certain things to happen in the tax world. Specifically in this case, getting VAT back, input tax recovery. Quite a simple thing you would have thought. You just claim input VAT on your tax return for VAT incurred on business expenses. But let me show you how it can go horribly wrong. So we've got husband and wife. This is a true story. Husband and wife. He ran a pub. So he's got a pub. She ran it with him, for want of a better phrase. We'll get technical. They were in business running a pub. However, it was in his sole name. He prepared sole trader accounts every year. That went on his tax return, not hers. He was VAT registered. Pub was obviously turning over more than the threshold, so he did VAT returns every quarter in his name, sole name. So what happened was HMRC challenged it. They for whatever reason they got wind of the fact that what was happening was the fact that that expense of the VAT on the rent, because they leased the pub from the freeholder, the VAT on that should not have been reclaimed. Why shouldn't it have been reclaimed? Well, we'll take a look. But what happened was they leased the pub. The freeholder opted to tax the pub. I've done separate videos on what that means, but basically what it means is that the building that they leased had VAT added to the rent. But not a problem, because they're VAT registered, they claim it back. But again, let's get specific. He's VAT registered. He's a sole trader. He claimed the VAT back. But here's the rub. The lease was in her name. The lease was in the wife's name, not in his name, not in joint names. It was in her name. She signed it off as a sole individual. So basically HMRC said, hang on a minute. He is not incurring those expenses. She is. So even though, yes, the supply of rent is being used and subsumed in that pub business, it's a genuine business expense. However, the supply is not to him as the sole trader, it's to her. And HMRC said, look, this thing would have worked from a point of view of claiming the VAT back if it had been run as a partnership. Because the rules say that if it's run as a partnership, in this scenario, even if it had been in her sole name in the rent as it was, had it been run as a partnership, they'd done partnership tax returns, partnership set of accounts, then in that case, yes, they could have got away with a faux pas here and all would have been well. But it wasn't. It was run with him as a sole trader. And so that's one way that it could have defeated this, but it didn't. So it wasn't run as a partnership. Also, had the wife subletted the lease to her husband, that could have also worked. She would have had to have opted to tax the property, of course, add VAT to the rent to him and subletted it. Then he could have claimed that back. But neither of those two things happened. So those two items, those two things of either being in partnership or her subletting the property to him would have resulted in a valid input VAT recovery claim. But that wasn't the case. It was a question of he was a sole trader. He was VAT registered. The lease was in her name, totally separate. So he cannot claim VAT back on that expense because she incurred it. May seem harsh, but that was what happened when this thing went to the tax tribunals and that was decided. So, you know, it's just one of those things. You might be shouting out saying that is so unfair, but that's unfortunately what happens. So make sure, for goodness sake, the paperwork is right. Who is supplying what to whom, and is that whom it should be to, basically? Is it to the right person? Even though all along it was always intended that the two of them would be on the deeds of this lease, but for whatever reason, she was the sole signatory, and it all referred to her in the documentation. It was just, you know, a bit of a nightmare for them. So get it right, get the paperwork right, particularly when it comes to VAT. The rules on VAT notoriously more onerous than for the other, for the direct taxes. Income tax, corporation tax stems back many decades historically. Customs and excise always tended to give people a harder time than the inland revenue. Now, of course, they're all combined. But for goodness sake, not just with VAT, but for any tax, get the paperwork right, or this kind of thing could happen. So if you like this video, please do subscribe, and I'll see you soon.